And good evening and welcome to this live Ask Me Anything About Property Investing with myself, Saj Hussain. I'm here every Monday evening at 8:30 p.m. to answer your property investing questions. Having said that, we weren't here last Monday because we had some technical challenges, but we had an extra session yesterday on a Sunday morning, which is great because it's never really sure how many people are going to be there on a Sunday. We had a really good turnout on yesterday's live as well. So I'm here for about 30 minutes to answer your questions around investing in property, whatever questions you've got. Just a quick caveat, I don't know everything there is to know about property investing, but I'm certainly very knowledgeable, very experienced. Been doing this about 15 years. So happy to share my knowledge and experience with you and help you in your property investing journey. Of course, there's lots of regular content we do on our YouTube channel. That's where most of the longer form content goes on. And often there's questions people ask where I've already answered a question in much more detail on the YouTube channel, which I might refer to time. And the great news is we are restarting our monthly property meet in just over a week's time. Really excited about that. I'll tell you a little bit more about that in a short while. So first of all, let me know you can see me okay, you can hear me okay. We're live on Facebook, LinkedIn, Twitter, Instagram, and not TikTok, I think. And not TikTok. No, not on TikTok today. Actually, let me know if you've seen any of my TikTok videos and let me know what you think of them, because I'm really not sure how kind of getting my head around TikTok at the minute in terms of putting content on there. So just let me know you can see and hear me okay. Make sure you put your question in the comment section on whatever platform you're watching on. Khalid, my wonderful assistant over there, will then throw up the question on the screen and I'll do my very best to answer that question for you. So let's get started straight away with a question this evening. First of all, this is Gorilla Investor on YouTube. Hi Saj, a vendor has a cash house. He's moving abroad permanently and I'm considering purchasing and paying him in installments. Can I use vendor finance, not a mortgage? So essentially, when you say a cash house, what you are saying it's unencumbered, there's no debt against it, there's no mortgage, it's been paid off. And so he's free to sell that property in installments to you if that's what you've agreed. Essentially, it's called an installment contract is the technical term. And let's say, keep the thing simple, let's say it's a £100,000 house and you are paying £1,000 a month for 100 months. And that's a simple £1,000 a month over 100 months, paid the £100,000 off. Now, you can get as creative as you want in terms of how you structure that arrangement, but simply speaking, that's how you would do it. It's set up as an installment contract. And if you have got it all agreed and wrapped up and you need some help with the solicitors, reach out to us. I can connect you with solicitors that understand those contracts and how to set them up for you. So let's get our next question up on the screen. I'm not even going to try pronouncing that name, but thank you so much for putting a question on. Hi, Saj. I'm in my fourth investment property now. I live in South Africa. My question is, how do I expand from here? I tried this year to add one property, but banks say no, loan to value is too high. So just to help me understand that, is your portfolio in South Africa or in the UK? Maybe if you can just let me know on that. And just whilst you're doing that, whilst that's flashed up on the screen, just kind of here, we've got our property meet starting next Tuesday, so just over a week's time. And the great news is we have, or there's lots of great news, but one piece of great news is we've got an amazing guest speaker. So I'm so pleased to have been able to secure him as our first guest speaker to relaunch a meeting. It's Neville Wright. If you don't know of Neville's somebody who's built up a huge portfolio of business and property literally from nothing. He sold one of his businesses for £70 million to Morrison's. And he's also got a substantial property portfolio. He's built about 600 homes in the last few years as well. So very experienced guy in business, in property, and also online entrepreneurship as well. So there's bound to be things that we can learn from him. He's worth about 100 million. So very, very experienced person. So he'll be our main guest speaker for the evening. So if you haven't already, make sure you book yourself on to that event. And we're going to do we're going to do something special for you. So make sure you keep watching in terms of booking a ticket this evening. So coming back to that question, it's in South Africa, your portfolio. So I have very limited knowledge in terms of property investing outside of the UK, but I'm assuming if it's anything similar to the UK, generally the banks want you to put a sizable deposit in. So like a 25% deposit, and it may be you've now purchased 4 properties, you've used up your money that you had, you haven't got enough to be able to buy a 5th one because you haven't got a sufficient amount of deposit. So maybe you can involve other people. So other people could be partners with you. You could they could fund part of the projects. That's one way to grow, and that's how essentially I started growing my business right at the beginning, by using other people's money, get them to partner with me on projects to build a business in that way. And the other suggestion I would make is look at if there's alternative ways you can secure and control property rather than just purchasing it. And I'm talking about lease options. And I'm quite sure that you can do these in South Africa. There's a friend of mine I have not spoken to for a few years. He was active in South Africa doing this kind of thing. So I'm assuming it's legal. You can do it there. So it'd be worth exploring if there's creative ways of controlling property so you can still make money from it even though you don't own it. And that will help you build up more pots of cash so that you can put down as big a deposit to continue buying property. So I hope that helps with that. Let's get our next question up. It's also on YouTube. Amir, hi Saj, how do you determine how much a special feature will increase the sale price of a new build? E.g., if I add underfloor heating, how much more can I ask for when I come to sell? So, excuse me, I thought I was going to sneeze then. Amir, I think the way to consider this is you've got to start with what's the most you can possibly achieve for that particular property. And then there's going to be a limit. And then as you start going past that limit, you're starting to test new territory as to what may be possible to be able to achieve as a selling price for that property. So let's say, for example, 500,000 is a limit for a brand new house of whatever type you're trying to build, because that's what they typically have sold for, ones that are quite nice. And if you start putting gold taps in and amazing other things, it's not necessarily going to make the property more expensive from a sales price point of view, because there's already a limit of what people are prepared to pay in that area for that type of property. Now, the things that generally will determine the value of properties is location, the number of bedrooms. On the bigger houses, it's the size of the house. So things like underfloor heating, for instance, will make the property more desirable, nicer, and more appealing to a buyer, but not necessarily add to the value of the property at the end. So these things you determine before you start, and you'd speak to local agents. Of course, maybe you've done your own research as well, what you think the property can achieve, and then you'd go with the agent's views about what features are going to be most desirable. For example, it might be a garage is a must that people want to be able to park their car in, or it might be that if you've got a conservatory on there, it's nice, but the extra 20 grand you're going to spend on a conservatory is going to add no value to the property. So it's thinking about these things before you start. Hope that helps. Hope that gives you a few pointers. Let me just quickly tell you about the property meet before we jump on to the next question. So as I said, it's in just over a week's time on Tuesday the 9th. And what I have for you is something special. If you haven't already and you book your ticket this evening before midnight, then I've got something special for you. In January, I'm going to be running 2 workshops. One workshop is those people that are brand new, just looking to start in property, and I'm going to help them with getting their strategy right, what type of investing they should be doing, because there's so many different strategies, and in my experience, people don't always pick the right strategy, and then they struggle and they don't succeed. So I'm going to help in terms of strategy and strategy planning. The other workshop I'm going to do is for those people that are much more experienced in property, that maybe been doing property for a little while, but really hitting a bit of a plateau. They're struggling to really push forward and go further. And for them, I'm going to help them in terms of ideas and strategies and techniques to be able to grow that portfolio in 2022, because strategies and techniques people are using are starting to change, and I'm going to share some of the things that I'm doing going forward as well. So they're the 2 workshops I'm going to be running in January, and as a gift for you, if you book your ticket this evening, then we're going to give you a place on one of those workshops that you can pick whichever one you want to do. Now, the way to do that is if you head over to the website, which the link is below, which is sajhussain.com/networking. And if you go over there, you click on the booking page, you'll then end up, I'm just waiting for these screens, you'll end up on this booking page where you can register your details there. Then it will take you to a second page where you make your payment. There's only the general £10 tickets available. Then in this box here, it's really important that you put the voucher code that I'm going to give you, which is 111 gift. If you put that code in this evening, that will then not only give you one of the workshops that we're going to have in January, but it's going to do an additional thing. It's going to put you into a prize draw, and that prize draw is going to be on Tuesday, next Tuesday, when we run the network meeting. We're going to be doing a small closed group mastermind session with Neville, our guest speaker. And you've got an opportunity to win a place to be in that room with those people there, and be at the round table to ask questions of Neville and how you can help in your business as well. I'm sure, as I said earlier, we can all learn something from somebody that's built £100 million business in business and property. So they're the two gifts I've got for you. One is a place on one of those workshops, and the second one is to enter you into the prize draw. The prize draw we're going to do live on Thursday, and we'll pick one winner for at random to be in for the round table. So make sure, if you haven't already, get your ticket booked. There's going to be an amazing evening. We've always sold out these tickets, and the way the ticket sales are going, I think there's 75% already sold. All the VIPs are sold out as well. So I'm confident, over the next few days, all the tickets will be gone, and you're going to miss out if you haven't already booked. Don't leave it to last minute. If you're a lastminute.com type of person, you're going to miss out. I'd strongly encourage you to get your ticket booked, and I'll see you there. Let's get back to the questions. So Don on YouTube, hi Saj, just wondering if it's a good time to enter the market for service accommodation. So with service accommodation, we had a video, I think it was just last week, we released on YouTube, where with my business partner, we were talking about our service accommodation business and how it's gone through bits of ups and downs over the last couple of years, particularly with the lockdown and how that impacted the property. But just as we're starting to come out of that, we'd almost seen a bit of a mini boom. It's just so busy right now. And our core market is servicing people that are working away from home, contractors, effectively. That's really our niche in service accommodation. I know people that are in staycations, they're just super busy, charging crazy rates and still getting them for their property because there's just so much demand right now. So that's absolutely one good reason to be doing service accommodation. It seems to be just coming back leaps and bounds. But also you have to think about, it's not the opportunity right now you can benefit from, but can you build this as a long-term business? Is this something you're going to build up as a business that you can benefit from in 6 months, in a year, in 2 years, and 3 years? So look at the longevity of the strategy that you're looking to do in the location. So the key factors you need to think about is, who is it that you're trying to provide accommodation for? Is there demand for those type of that type of accommodation from those type of people in that location at the price point that you're thinking about? Now, one of the easiest ways to do that research is look at what the alternative is. What's the competition that's available? So for instance, what hotels are already operating there, servicing the people that you're looking to provide accommodation for? And if they already exist there, they're doing well, they're busy, and your competitors running service accommodation, their diaries are packed out, their calendars, then that's a good sign that there's an opportunity there. I'm not saying that's the only research you would do, but that's a good place to start to work out if it's a good strategy to implement. So it's not just the fact that you want to run service accommodation, it's also understanding where you're going to run it, who's it going to be for, what type of accommodation it's going to be, and what price point it's going to be at. They're the key factors that I would be thinking about. And yeah, just reach out to us if you can help. Make sure you watch our videos on YouTube. We've got a few videos on service accommodation in terms of a bit more of a deep dive, so look out for those too. So next question from Clive on LinkedIn. Is Sutton in London a good place to invest? Great question, Clive. I know it's a nice place, but that's about all I know about Sutton. I'm in Birmingham in the West Midlands. That's really our area. That's what we know quite well. That's where we invest. And so I guess the question I would ask you firstly is, why are you looking to invest? What is it that you're trying to achieve? What outcome is you looking for by investing? So for instance, are you looking for long-term capital growth? Are you looking for a steady income right now? Are you looking for a high income? These are various different things. Sometimes people say, I want all of these things. Well, sometimes it's possible, but often it's usually one or the other that you pick. You might do a compromise in terms of where you're buying. So for instance, let me give you an example. When we're buying properties, say in the north side of Birmingham, we know we can buy those properties cheaper for a lower price compared to what we can get in South Birmingham. But when it comes to capital growth and long-term appreciation of those properties, we know it's much more slower in the north side of the city than it is in the south. In the south, it's much more affluent. This is very generally speaking now. It's more affluent, so the prices rise quicker as well. So I know we get better capital growth when we're buying in the south, although we're paying more than we are on the north side of the city. And so that's one factor. The other things you've got to think about is what investments and in terms of infrastructure is happening in that area. And I don't know Sutton, so I don't know whether there is any big investment happening there. But if there is, then that also has an impact in terms of a positive impact. Long term, it will start helping pushing the prices up. For instance, where our offices are in King's Heath in South Birmingham, the train station is due to open up in a couple of years' time. And I know that's going to really push up prices in this area because it's going to make it so much easier for people to be able to get to the city centre and even from the city centre straight into London with HS2. So these things have an impact in terms of prices long term. You've got to look at who is it you're going to rent to. Is there demand for that type of property for the people that you're looking to provide accommodation for. And of course, the numbers need to work. How much deposit you're going to put down, what's the purchase price of the property, do the rental numbers stack, what return on investment you're going to get, or what I'm more interested in is what return on capital I'm going to get. So so that means how much money I've got tied up in that project versus the actual net return I'm getting. So I hope that helps. So let's get our next question up on the screen. So this is from Jason. Jason, long time no see. I hope all is well with you. I hope the family is doing well too. Hi, Saj. Good to see you back and looking trim. Oh, I'm not looking trim, buddy, man. I'm putting weight on. I really need to get trim. I hope you and the team are well. Thank you very much. What do you anticipate the biggest opportunities in the West Midlands over the next 12 months? As a property source, I'm interested to know where the property investors locally will be looking. Well, you know, we've been speaking as a team, and I, not you and me personally necessarily, at some of the things that you're already looking at, like commercial buildings and converting those. And that's where I think some of the best opportunities are going to exist, especially where some of the areas are more lower priced in terms of pound per square foot for commercial property versus what the residential is. A residential, if it's in place, but there's already got some new properties there, the price is fairly decent, and so your conversion cost is going to be the same and your profit margin will be higher. That's where I think some of the best opportunities exist right now in terms of what you're already doing and where other people can benefit from as well. Hopefully I'll see you next week at the property meet, and we can have maybe a little catch up there. So Amit on LinkedIn. Hi, Saj. Do you think new builds will decrease the value of Victorian builds as more are built? Thank you. So Amit, personally, I don't think that would happen. There's a massive shortage of new homes right now. So we just can't keep up in terms of producing the volume that's required. And that's not something that's just happening now. That's been the case for years. There's been a huge shortage in the amount of accommodation that's required versus what's being built. And that's probably going to continue to be the case for a little while. You know, there's so many things the government can do to make that easier. They'd support and encourage developers. They'd relax certain planning restrictions that are in place. And if they did that, then there'd be just more buildings out there. So sometimes, you know, I don't know what the government is thinking about, because they influence this market. They effectively control what happens in this sector as well. But the way things are at the moment, you know, I really can't see them putting squeezing the prices down on Victorian properties, because the assumption is people don't want to live in Victorian properties, they want to live in new builds. Well, some people do and some don't. You know, I years ago, where I used to live, my neighbor had a nice Victorian terrace house, and he'd spent significant amounts of money to restore that property to how it would have originally been built, with some of the original features and things like that. So not everybody necessarily wants brand new, modern, high tech. Different people want different things and aspire for different things. And there's so much existing property out there. It's not just going to disappear. The demand for that is not going to disappear. I think there's different types of customers. And it's like saying, if there was lots of new cars for sale, would a second-hand car market dry up? Not necessarily. Some of it's driven by price and what people want as well. Might not be the best analogy, that, but you see the point I'm making, that people that necessarily, for example, want new properties may not be the people that want Victorian, and those that like Victorian properties or like to be able to add them and you know, make them their own and change them around are not necessarily going to buy new build. And also, finally, with new build, you pay a premium. You pay a premium for the fact that it's a brand new property, just like you would on a brand new car as well. Not everybody necessarily wants to do that. Next questions also on LinkedIn. LinkedIn's on fire today. Lots of questions coming through on LinkedIn. Sahel, hi Saj. When would you consider having a buy-to-let properties in limited? So I think, Sahel, what you're saying is, at what point would you start buying properties in a limited company as opposed to in your personal name? Well, the way taxation is right now in Section 24 ultimately means that you're just going to get clobbered heavily tax-wise if you're buying properties and you're building a portfolio in your personal name, because you're not going to be able to offset the interest costs. This is assuming you're using mortgages, which a vast majority do, but not everybody does. So you're not going to be able to offset those costs, and effectively you're paying tax on the gross rent that you're collecting as opposed to the net profit you're making. And that's essentially what Section 24 has done. And so the solution to that has been that people are then buying properties in limited companies. The reason being, in limited companies, you can still offset your interest costs as an expense. So you're paying tax on net profits as opposed to the gross takings, if you like, of rent that you're doing there. Now, there is a little bit of a threshold where if you've got, say, a couple of properties, you're a low rate taxpayer, there's probably not going to be any benefit for you to move into a limited company with the costs and things as well. It's only if you're really looking to build that, you're going to be adding properties to it, and you're going to end up as a high rate taxpayer, that you will really benefit from being in a limited company. Now, that's very generalization. I'd strongly encourage you to make sure you sit down with an accountant and get some good advice before you start your business in terms of what is going to be the best way to do it. And when you do that, remember, it's not just the tax advice you're looking at. You have to look at what structure you're going to set up so that the lenders are still comfortable to lend you money. I know sometimes accountants can come up with some really creative ways on how to get super tax efficient, which is great, but that puts you in such a position that the lenders are not then comfortable with that structure and they don't want to lend. So that limits your ability to be able to borrow money to buy property as well. So it's getting that balance right. So it's not just the advice of the accountant, but when you're also speaking to lenders and have a chat with your mortgage broker in terms of what sort of structure would be right. So if you're doing a simple structure, one director, shareholder, a fairly clean entity like that, then you shouldn't have any problems with that. So our next question is from Lorraine Hall on Facebook. Where's the network meeting being held, please? This is being held at Edgbaston Cricket Stadium in their nice big banqueting suite. So it's going to be a fantastic room. So lots of networking happen. As I said, about 75% of tickets have already gone. All the VIP tickets are sold. So Lorraine, if you haven't booked a ticket, I'd encourage you to get that ticket booked and use the website address here, sajhussain.com/networking. And if you book this evening and you use this voucher code that I've put in here, then you'll get 2 gifts. Make sure when you put the voucher code in, you click the apply button, because if you don't click the apply button, you won't apply the voucher code. If you do that this evening, you use the voucher code, and then we'll give you a place on one of the 2 workshops that I'll be running in January. One is for those that are brand new, just starting out, that don't have any experience, helping them find the right strategies for them and getting clear around that. And the second workshop is for those that are much more experienced, that may be kind of plateaued a little bit, and talking to them about, what the opportunities are going forward in 2022 and what I'll be doing as well next year, and sharing some of my knowledge and experience there. So though you'll get a place on one of those 2 workshops, and additionally, you'll get entered into a prize draw, which will announce on the winner on Thursday, which will pick a name out of a hat for that. Randomly, one person will then become a guest and join us on the Roundtable Mastermind session that we'll be doing as a small private group with Neville just before we start the property meet on Tuesday. So I hope all that's made sense. I hope I've explained it well enough. But in short, if you haven't bought your ticket, you're missing out. You've got the best deal you're probably going to get today. Jump on, book your ticket. Let me know in the message as well that you're coming, or you've booked your ticket, and hopefully I'll speak to you there as well. So let's jump on to our next question. How are we doing for time? We've still got time. Next question is from Manova on YouTube. I have investment or residential property under my belt, but have a successful business. Can I get a commercial mortgage straight off the bat? Correction, I don't have. So go back to the question. I'm confused. I don't have investment or residential property under my belt. Okay, I think I understand. So essentially, you don't have any property right now that you own, but what your question is, can you go straight into a commercial mortgage? But you have a successful business. So I think it's going to be a little bit more challenging, but certainly not impossible. So depending on what it is that you want to achieve, for example, if you're purchasing a property that's already tenanted, a commercial property with a good tenant in there, it might be you need to put a larger deposit down. You should be able to get a commercial mortgage on that. If you're thinking about a HMO, where you're taking a property, you're converting it into a HMO, and then trying to get a valuation based on its commercial valuation based on its income, then you're going to have more challenges around that. Again, not impossible, but much more difficult. And if you need to reach out to a good broker, if you want a recommendation, send us a message and we'll get you to complete a short form just to understand exactly what you are looking for. And then we'll put you in touch with one of the brokers we think can help you with that. Because I'm not a mortgage broker or financial advisor, so I can't give you that advice. All I do is share my knowledge and experience from an educational point of view. So next question is from Iftikhar on YouTube. Hi Saj, I've just opened a limited company. If I move my existing properties to the limited company, will I need to pay stamp duty again? If I do have to pay, is there a way to minimize the amount? Yeah, so this question is not so straightforward. So let me explain what I mean. So if you leave the question up for a minute on screen, Khalid, because you've set up a limited company, which is a separate legal entity to yourself. properties that you own in your own name are separate. You can take it off the screen now, Khalid. They are in one legal entity, i.e. you, and your limited company is a separate legal entity. So essentially you've got two separate legal entities. If you transfer from this one to this one, it's not really a transfer, it's effectively a sale, then yes, you end up paying stamp duty. So that's the challenge that many people have had when they've tried to set up in limited companies. They've got some properties in their personal name. How do I move them across? So what the process really is, you incorporate your existing business. And the process that many people have used is they transition into an LLP. Then from an LLP, they transition into a limited company. It doesn't happen overnight. There's a process that you go through to do that. And that's how you can then shift what you already own into your company. And you really need a good accountant and tax advisors to do that. That's not something that I would say probably 90% of accountants would have the experience to do. Again, if you want a good contact, reach out to us and we'll connect you with somebody that can help you with that. So next question on YouTube. Hi Saj, thanks for all the great free content. You're welcome. My question is, when buying a HMO with tenant in situ, what sort of information should I request and investigate? So if you're looking to purchase, it might be a HMO or any kind of property, when the tenants are already there, effectively you're going to take on those tenants, you're going to become their landlord. Think about it like this: if you were going to let to those people now, what would you look for? What would you ask for? And these are kind of good starting points. So it's some of it's the legal side, and some of it's, is it the sort of tenants that you're looking to have in your property going forward? For instance, if you've got a tired HMO, you might have some tenants in there paying a low rent. It's not a great house, and you're thinking, I want to make it much more nicing, amazing, and I want to charge a higher rent. Well, if you're taking on the tenants already there, they're not going to be increasing their rent by a massive amount just because you've spruced the place up a little bit. It's unlikely, because they're probably working with their means, their budget. They'll probably move on. So that's one thing. It's looking at who's already there. Would you take them on? What do they do work-wise? How much do they earn? What guarantors are already in place? What credit checks are being done? What affordability checks are being done? So you're vetting the people already there. Then, of course, you got to do the legal side as well. The legal side being things like, have you seen the ASTs? What type of contracts are they? Are they being written, drafted well? Have they been served the documents such as the right to rent? Checks, have they been done? Have their deposits been registered correctly? Have their gas and electrical certificates been issued? Smoke detectors being checked? All these things that from a compliance point of view, you want to make sure they're being done. So I run a mentoring group, and I have some one-to-one calls in that. And the reason I share that is I was just having a conversation just earlier before this session, and one of the mentees was looking to purchase a property with the tenants already in there. Well, the conversation initially started off that buy the property and the tenants would leave, but then the tenants are now not leaving. But now we're starting to dig a little bit deeper. We're starting to discover, actually, it looks like that some of these documents haven't been served properly, and that landlord's in a bit of a problem, which is why they're trying to offload the property. So you need to be careful that somebody else's problems you don't end up inheriting in that situation. The solicitors will do some of the work for you, but I wouldn't rely on that. I'd make sure you get all the documentation. You check it thoroughly as though you were going to rent the property out today to somebody. What checks would you do? What compliance bits you need to do? And then go back through the solicitor and ask them to provide all this information. And if they can't provide it, then I'd be very concerned about that, because you could be taking on quite a problem. So, for example, just if you haven't served some of the documents correctly on the tenant notice to evict them will effectively become null and void. They're ineffective. You can't really evict your tenant very easily. Deposit monies can be claimed back on multiples of that if they haven't been registered correctly. So you just open up a can of worms. Essentially, you've got so many problems. My preference is to take on properties that are vacant. I have, on a rare occasion in the past, taken on properties with tenants, but be very, very cautious in terms of how we do that. So I hope that helps. So next question from Julia on YouTube. How do you go about finding investors to work with you once you have exhausted all avenues, friends, family? As a new property business, it's hard to prove value builders without having flip history. So Julia, this is a common problem many people face. A case, okay, so I want to get into property and I want to get started, but I haven't got the funds, so I need to find investors. I need to find people that can invest with me. We start with friends and family, which I think is the best place to start. People that already know you and hopefully like you and trust you are much more likely to want to do business with you. Now, so those three things are quite key: know, like, and trust. Now, when you're meeting somebody brand new and you're looking for them to invest in you, it comes back to the same factors about really giving them an opportunity to get to know you, get to like you, and trust you so that they want to do business with you. And of course, you should feel the same about them, that you trust them, that you want to do business with them. Just because they've got the money, it doesn't mean you should do business with them. It's really important to understand some of these projects, like, for example, some of our HMO partnerships, they're 10-year joint ventures, and often many marriages don't last 10 years. So you've got to remember, you're partnering up with somebody who will be a long-term partner with you in business. That's effectively what you're doing. Even if you're flipping properties, it's not going to be a 2 or 3 month arrangement. It's significant amounts of money that's going to go into a project, and of course they're going to be concerned about protecting their interests as well. You've got to make sure that you're going to get paid. So there's things going on there that where people are all trying to protect their own interests. But if there's a good understanding, a good relationship, clarity about what people want, what the outcomes, what's important for people, then it's much more likely to work. So how do you create all that? How do you find that? Well, the first thing you've got to do before people get to know, like, and trust you is be visible. But what I mean by being visible is be seen. That could be at networking events. So if you haven't already, quick plug, make sure you book in for our networking event for next Tuesday. And so getting out to networking events, being visible on forums, on Facebook groups, so people get to know you, be active on social media. One of the reasons I do these live Q&As, yes, I use my knowledge and experience to help other people to progress on their property investing journey. So many people helped me along the way when I started as well. It's a great way to give back. But of course, it raises awareness about who I am, what I do. And I work with lots of investors. People invest with me in our projects. Sometimes people see this, they start conversations around what we're doing and could they get involved in funding projects. So that's one of the benefits from doing this. It raises awareness. In the same way, think about how can you raise awareness? So when people have become aware of you, then the conversation starting around know, like, and trust. The other challenge is you don't have any experience. How do you get that experience if you don't have any experience? Where's the experience? What comes first? Well, the way to get some experience is if you haven't actually already got experience, and people think, well, you need to be experienced before I can invest with you, and think, well, I need investment before I can get any experience, is to partner with somebody who already's got the experience so you can leverage and learn from them for, say, the first project, and that starts building your track record. So you might end up taking a smaller slice of the cake for the first one, but then it gets your foot on the ladder to start moving forward. So I hope that helps. There's lots of videos on my YouTube channel where I talk about raising money in detail. So you can look at that as well. So just a quick reminder, if you haven't already, make sure you visit the website and book onto the networking event, which is sajhussain.com/networking. I've got a special gift for you as long as you book today before midnight, because the code will then switch off at midnight. So the only way that you're going to get this by using this code over here somewhere, 111 gift. And so when you go to the website, you book on, it's only the general tickets are available. The VIPs are all sold out. And I think more than 75% of the main tickets are gone. And we'll put you into a prize draw, which will be an opportunity to spend some time with Neville in a private small mastermind group before the main event on Tuesday. And also, we have got 2 workshops in January, one for people who are just getting started, one for those that are much more experienced. And you'll get a place on one of those workshops. So you get a place on one of those workshops and you go into a prize draw to potentially spend some time with our guest speaker on Tuesday. So what is there not to love about that? So make sure you get yourself booked on. Let's get our next question. How are we doing? Is this our last question? It's our last question of the evening. So let's get that one up.
It's 4 questions in one.
It's 4 questions in one. Someone's been a little bit greedy. Sabia, what do you think of bridging loans? Is it good for new investors? What happens if I can't sell the property at the end terms? Can it be sold at auction then? What are the risks? So maybe leave that up because there's a few questions. I want to make sure I address them all. So bridging loans are certainly more risk. And I think it's important to go into these things with the eyes open. Just like when you're buying at auction, that you need to be aware. People talk about buyer be aware. It's the same thing. You need to be aware of what you get involved into. With bridging, it's a little bit like private finance. Bridges are often very good at protecting their interests, and it's really asset-based lending. So it's easy to get in the sense that as long as the asset has some value, they'll lend some money against that. But it's often not really at favorable rates, often quite high rates, and there's lots of costs and charges involved in terms of doing that. And the reason people will use bridging, as long as it means they can get into the deal, they'll make more profit than they're going to pay out in terms of costs, people still use it. So that's fine, as long as you understand that. For new investors, I'd say you have to be very, very careful, because if you get stuck, if a project takes much longer, it costs more, which often they do, and then the numbers don't quite look like what they're going to do, you can't exit in time. And remember, it's a bridge, so that connects from one thing to another. So the purpose being, it helps you buy the property so you can come off the bridge and either maybe remortgage or sell the property at the end. But let's say you're struggling to sell it, you can't sell it, you can't complete the property, it's taking too long, you run out of funds, you hit other problems, and then you are at risk of losing that property. Just like with any secure debt, really, there's a risk. But with bridging, you have to be mindful that the bridges are not really going to be, I'm generalizing now, but they're not really going to be interested in your reasons. You know, if their money's protected and if it's not returned when it's supposed to be, you're very likely to lose that property there and they'd sell it. And yes, you could sell it yourself when it's part completed, but you know, bearing in mind you're probably going to have other investors looking to buy it and you won't get the best deal. So yes, bridging can be used. It's a tool there that many people do use it. You just have to be very careful and understand what you're getting involved in and what the terms of that arrangement is as well, and fully understand all the costs involved in it as well. So hope that helps. Sabir. So I just want to say thank you all so much for spending some time with me. Hopefully, I shall see you on a week tomorrow, but I'll be back here next Monday, before our event. I'm sure most of the tickets will be probably, well, if not all the tickets will probably be sold by then. So get your ticket booked, and I should see you on Tuesday at the property meet. Really excited and looking forward to that. See you soon. Thank you very much.